But the reality is if you don't have capital that you can use, it's going to be very difficult for you to become wealthy. Being broke is a personal decision. You can have all the money in the world and you have no health, you have nothing. Life insurance is the bedrock of all financial plans, because the reality is if they pull you out of your financial plan, usually the financial plan is dead. The reality is most people don't know about life insurance because they only think about it from their parents. I'll give you an example. When I came home and told my mom and dad that I was going to do a new career from coaching football to being a financial person, great, what are you going to do? And I started to talk about life insurance. My mom cried. She said, there's two occupations I never wanted you to have: sell cars and sell life insurance. And the reason why was in the old days, you didn't want to see the life insurance salesperson because you knew if I paid the premiums, the only way that I was going to get any value from that is I have to die. That's how many people have it from the predecessors of their life, which is their parents and grandparents, are the views of how they had those feelings of life insurance. And that's not the modern day life insurance products or services. It's just not. Well, first off, nobody wants to pay something for their whole life. That whole life sounds like you got to pay something for your whole life. It's actually not true. And I'm going to go back to a very simple and very important truth. In order for you to be wealthy, you have to accumulate and deploy capital. Most people only have capital in a few areas. You get capital in equity of your home. Many people use their home as something to fund their future, pay off debts, send kids to college, things of that sort, because they have accumulated capital that they didn't really know they had. The second is a retirement fund, 401k plan or something like that. But the unlocked one that is ability for you to have access to is in life insurance. But most people don't think about that because they're not taught it. And most insurance companies are not telling people like you and me, hey, this is a way for you to accumulate capital so that you can deploy it correctly. There's a big phrase that's coming out, hey, be your own bank by using life insurance. The reality is that's possible if it's done correctly. But it's not just a catch term to say, hey, this is how you can scam the system, which is usually how people are taught about it. It's not the case. And one of the tools that's not talked about, which is why we're having this discussion, it's about life insurance. I can answer it one of three ways. I can answer it as a way, yes, and here's how you would do it. And if you did it, it includes trusts, and it includes policies, and it includes a formal setup of how that money is going to be distributed. Let's say I want to set up a legacy for my family. I buy a bunch of life insurance, appropriate life insurance for myself, maybe even overinsure myself. And when I die, that goes into a trust. Then I buy life insurance on all my kids as well. And the beneficiary of those life insurance is the trust, because the trust then funds the family. The second part of that, though, is the trust then becomes the capital, like the bank itself. There's a bunch of capital in it. That money can be used to start businesses, and then that money is loaned to the family members that they pay back, which funds life insurance. So there's always this ongoing amount of money that comes into this trust that continues to get bigger and bigger and bigger, that funds education, that funds businesses, and funds the next generation. And how that trust stays relevant is using life insurance to fund that trust. But the second way that you do it for generations is that you would then, whatever assets that you have, if it's significant assets, you want all of those assets to transfer accordingly. So you buy life insurance to pay the taxes that you would owe on that to transfer. And the third way that you do it, which was how many of the immigrants that came into the United States, they couldn't afford a lot of things, but they wanted their kids to have a better life than they did. So what they did is they bought big life insurance policies, and when they died, that went to their kids, and they made sure that their children had the better future than they did, based on using life insurance. The everyday people look at it as a cost. And very wealthy people look at it as an allocation. It's a way that they can take part of their money and allocate it correctly so that it can be transferred when they want it to be transferred and how it's to be transferred with low taxes. It's very efficient. But the second is it's an easy way to accumulate capital in a tax-advantaged way that they can deploy their capital how they want, when they want, without very little restriction. It's a powerful thing. And most wealthy people have a portfolio, not just one, a portfolio of life insurance. Yeah, so how did the tax benefits really come into play was there's several stories about it. I don't know which ones are true, but the ones that really resonated with me was that when sailors would go into the sea to do their trades or fishing and things of that sort, the families used to put money into a barrel. And when they came back, the family members that didn't come back, that money was distributed to those families. It was to protect them from the income of which they would have lost because they didn't get the spoils of the trip. That has also been true in terms of almost everything that I've seen from the history, whether it be in Spain, the Netherlands, England, that all did these trade routes. They all did something similar to that. But the first real insurance company was actually a Dutch company because of these trade routes. The most important part to know about it is it transferred then because of all the needs of all of the occupations in the world said, wait a second, that applies to us. And then that's how insurance companies said, there's a business here, but more importantly, an obligation. One of the cool parts about having an insurance company is that they are required to withstand and uphold the contract that says when you buy a life insurance policy from them, they'll pay it. And especially when you pay it when you need it. And the most important part of all that says the government says not only is that important, but we're going to actually support that with these tax benefits. So I'm not quite sure when 7702 came into existence, but I do know that it was built around that same premise that when families need it, they can get it. And they can get it with a tax benefit.